Thank you so much, Alex Steele, for that report on tax policy. Welcome now, Mattie Duppler. She's senior fellow with the National Taxpayers Union and founder and president of Forward Strategy. So, Mattie, always great to talk with you about taxes. If it's great to talk with anyone about taxes, let's be frank, none of us want to pay taxes if we can get out of it, but we need to do it. The question is what we're paying them for. And pick up where Alex left off here with the difference between corporations on the one hand and individuals on the other. I can understand, I guess, that it might affect a corporation's decision whether to invest or not invest. But does it really have an effect if you tax wealthy individuals? Because typically they don't spend those last dollars anyway, right?
Well, and David, in fact, it's hard to separate business taxes from individual taxes because the majority of business income in this country is paid on individual tax returns. Those are pass-through businesses, sometimes known as small businesses, but they're the businesses where the individual owner is the one who's paying the taxes from the receipts on business income. Joe Biden has said that he would raise not only the corporate income tax rate, but the tax provision that I think is most important is that full and immediate expensing that Alex mentioned. That starts to expire as a part of the Tax Cut and Jobs Act in 2022. That's going to be a huge debate, not only in Congress, but also for whomever is in the White House, because that is such an immediate boon to individual taxpayers. Now, you're right that higher income earners aren't people who are typically paying something like a stimulus check. They're not going to spend that right away. They're probably going to save it. But higher income earners are those ones who are running businesses, who are making hires, who are putting capital back into the economy in very important ways. Higher taxes on that capital is going to immediately put a lot of pressure on that kind of spending.
Mattie, it's Jeannie Zaino. And just where you left off, something that Alex was talking about is under Biden's proposals, he is going to make the rich pay. And we're looking at the top 1% of households paying about 3/4 of the tax hike, which is politically more palatable. Are there any major downsides to that beyond the politics of it?
Well, I would say that there are some components of the Biden tax plan that won't just be hitting higher income earners. Something that concerns me a lot is the increase in the tax max, so that Social Security tax that starts at $400,000. That tax max, that lower bound on that tax max, isn't indexed to inflation. So that's going to start to creep up, and that's going to start hitting individual earners who don't make $400,000. A couple of years down the road, you're going to see more and more of your income being taxed. And of course, the Social Security tax is one that's extremely regressive because everyone pays payroll taxes. Not all income earners pay income taxes, but everyone's paying a payroll tax if you have a job. That concerns me a lot for lower income workers.
Hey, Mattie, Rick Davis in Washington. I want to talk a little bit about the kitchen table issues that have surrounded this election. What are the issues that voters have been grappling with? I mean, we've talked about the stimulus, but that's probably not a kitchen table issue. Some of the trade and tax issues are way over the sort of concept of sitting down with your family and saying, here are the financial pressures that we have. What are those things that are maybe driving some of the vote we're seeing today?
Yeah, well, more than anything, I think individual Americans feel their economic issues more than they think about them. They look around in their communities and they see if their neighbors and themselves are better off than they were during the previous election. This is what happened in 2013, 2014, where we saw Republicans take control of the Senate in Washington. You had basically, the green eye shade wearers in Washington, D.C. telling the rest of the country that the recovery had started, and a lot of workers in the Rust Belt really feeling like they had been left behind. So what I always look at is the wage number. Are wages rising in a way that is meaningful to Americans so that it outpaces inflation and Americans feel like they're actually getting more for the work that they're putting into their jobs? I think that was certainly the story heading into 2020, but because of coronavirus, that relationship has definitely eroded and Americans are feeling like they haven't had the opportunity that they had at the beginning of the year. The question, of course, is whether or not Americans see this as a blip on the radar and they think the policies that Donald Trump put forward allowed them to have that benefit going into 2020, seeing some of the highest wages we've seen in this country in history, or if they think that because of over the past 8 months that leadership has really vacated the opportunity for them to make that progress back, they'll of course reward Joe Biden for that. That's the question in front of voters right now when it comes to economic issues.
So, Mattie, as I say, nobody wants to pay taxes. Nobody's in favor of taxes, but we know that they are necessary for all sorts of reasons, including for investment for all of our sakes. What about the difference between tax cuts and tax reform? When President Trump first came in, there was a lot of talk about tax reform. I'm not sure there was much tax reform on what was done at the end of 2017. Are there some things that would be genuine tax reform that would raise revenue that would not be deleterious to the economy?
Certainly, a more efficient, effective tax code would be better for the economy. It would be better for taxpayers. It would be better for businesses who are participating in that economy. David, you and I have had this debate a lot about whether or not 2017 is characterized as tax reform. I do think some of the simplification measures on the individual side were extremely important. Things like doubling the standard tax deduction. Now 90% of Americans take the standard deduction rather than having to itemize and wade through the morass that is the tax code. More simplification efforts like that would help businesses to not spend hours and hours and billions of dollars on filing their taxes. It would also help families to free up income and time for them to be able to make sure that they're doing the things that are important to them and not spending money trying to combat the IRS. That would also have a huge economic impact, not just on the bottom line for families and businesses, but just in the economy overall. Getting the weight of the tax code off of the private economy, I think, is something that both sides could agree would move the needle forward on tax reform.
But Mattie, isn't it the fact, and maybe I just don't understand it, that in fact we've larded up the tax code with all sorts of things that don't have anything to do with raising revenue in the most effective way, but changing people's behavior? In fact, wouldn't we be better off just charging everybody the same amount of money? On the other hand, if we want to encourage somebody to do something, just write them a check.
David, I think that that's absolutely correct. But look at that debate. 2017 is a great example of this. Right, with the state and local tax deduction. The state and local tax deduction is something that high income earners in mostly blue states, because in places where you've got lots of metropolises that have high tax rates, individuals are paying those taxes. This was capped at $10,000, and it has been literally the thorn in the side of every tax writer since. They've been going back and forth about whether or not they're going to repeal it. It was even in the House's COVID relief bill. I mean, these kinds of efforts take a lot of time. The fact that there was even a cap put into the mortgage interest deduction was a huge step forward to getting to the things that you're talking about, which is a lower, flatter, more simple tax code that gets rid of special interest and gets rid of some of the stuff that makes the tax code more complicated and more costly for all.
Mattie, as I say, you're the person I want to talk tax with, no question about it. It's always fascinating. I always learn something. That's Mattie Duppler. She's senior fellow with the National Taxpayers Union. Bloomberg contributors Rick Davis and Jeannie Zaino will be staying with us. And now we're going to check one more time the